This is Randy Finney with Right Side of the Chart, and this is a market update for Friday, October 5th, 2018. Second update today. First one was for members only, and this will be a general broad market analysis, so YouTubers can watch this one. We're seeing what's been building for a while now. We're not down huge. The S&P is down. What is? I have it on another monitor. It's not down too much compared to the Nasdaq 100. Again, is leading the way down. And sorry, I'll get to the percentages in a second. So as far as you know what's going on today relative to the lift that we've had in recent months, it's not a lot, but we are seeing technical developments that are worth noting, and I want to go over some key levels and look at where we might be headed. Starting out here, this is a Nasdaq 100 E-mini futures. This is a yearly chart, daily time frame, I should say, and this is a trend line, an important trend line that goes back to the early 2016 lows right there. You can see a lot of reactions to validate that trend line. So, and I do think we're coming down to this trend line, whether it happens very soon or after a bounce. And I'm leaning towards very soon. There it is. There's your reactions there. So we've tested that trend line several times, 6 different reactions, and let's just zoom in and see what's going on now. Remember, I'm trying to keep the bigger picture in mind here. I've been focusing a lot on the micro levels recently, or the shorter term charts, 60-minute charts, and this is a daily chart, and this shows you that big divergent high. This is the divergence from that point back here. It started all the way back in the highs in early January. We had a small divergent high there with a quote unquote relatively small correction. It was pretty decent. And we've pushed up, and as I've talked about for weeks, actually months, we've been diverging higher. And so now we're finally getting evidence, sell signals. That's what we've been waiting for. As I always say, divergences in themselves are not a buy or sell signal, merely an indication that an impending trend change is likely. So what your sell signals are trend line breaks, bullish or bearish candlestick patterns, things like that, that give you a clear objective sell signal. So on NQ, as I zoom in here, this is everything I've covered recently. We broke down, and NQ has just been back testing this minor trend line here off the early April lows for some time now. And that's why I've been focused on mainly on the 60-minute charts. And then this little trend line here, you can see right there, that was our sell signal when that broke. So we had this little wedge that formed under the bigger wedge here, if you will. There we are. So where I'm going with this is we are now at a pretty significant resistance level. I've covered a couple recently on the 60-minute charts, but here's a daily chart. And I have this blue line here at 73.6350. And I posted this in the trading room a minute ago, and actually we're actually trading down to that now. So what I think happens if this level gets taken out, and I do favor that. We could bounce here. It is support, get a little reaction. We're getting a little stretch near term, but again, there's a lot of pent up energy on the short side, and I've been saying that for a while. Once these levels go, there's a possibility to usher in, pretty wave of impulsive selling. Markets have gotten ahead of themselves. Let's just put it that way, and defied bearish technicals for a while, where those technicals didn't dissipate, they just continued to build, and so therefore the potential for a big drop is there. And make it quick, I'll just tell you this is would be, and I think this level goes. Of course, if you're a dip buyer, you step in now. There's your nice biggest pullback we've had in a while. You buy the pullback to support here, but if not, I think we're going down to that trend line, which measures about give or take another 3% or so below current levels. And I think that's where we go before we get a decent reaction, being that that's a long-term trend line. So there it is. That's from long-term perspective, daily time frame. We'll look at ES real quick on a daily chart. I could draw other longer-term trend lines, but the ones I'm looking at on ES, this white trend line was the one that I had up before, and that has more reactions. That's the tighter of the two, and this is what I call my benefit of the doubt trend line, when I can come in here at that same low right here off early May, capture. There's a couple spikes or candlestick shadows there that come below my first trend line. So if I capture those, we're right at that trend line support now. So if that is taken out, uh, I think by just about any account, I mean, you can always draw another trend line here, and I'll do that now just to show you what could come into play too. This could form to be a trend line. There's 1, 2 reactions. In my book, you need to see at least 3 reactions on a trend line to validate it, because any 2 points can be connected at random. So there's a potential target as well. And let me give you a horizontal price level to watch on On the again, these are the S&P 500 E-mini futures right there. Gosh, I don't know which line that. Yeah, that should be this top one here, about 27.95. Okay, that's a likely target as well. And let me just measure that out as I'm doing this video and see if that roughly coincides. Remember, the tech stocks tend to fall. The QQQ, NQ tends to fall a lot more. That would be a 3% drop. So yeah, they're roughly in line if it hit that horizontal level, and if it's a trend line 2.5, so still roughly in line with a drop in NQ. So there's some targets, and let's just look at a few other charts, and we'll wrap this up. Okay, this is coming down to the 60-minute time frame on NQ. There's a horizontal price support level right there. It's about 73.6350. And actually, after I started the video, it looks like we just hit it there a second ago. We bounced a little since then. So that's certainly a potential price target for today to get a bounce. You can see a lot of reactions. Oh, some reactions there, some reactions there. And I'm trying to grab the majority of the reactions in this area where trading was choppy. And as I zoom in, you can also see one other development that may play out, at least for a near-term bounce, and that is bullish potential, bullish divergence. We draw a line there. Got it cut. I have to move these indicators up a little bit. There it is. You can see from here to here. So far, we have a higher high in the MACD as well as a PPO. I don't have the signal line on this PPO and the RSI. So if we reverse from here, remember when I say potential divergence, I like to see that second. I like to see a higher low put in via a bullish crossover. So we had a bullish crossover right here. There's your low, and see the momentum indicator is still heading down. So that's why I call it potential divergence. In my book, it is confirmed once you have a bullish crossover and effectively put in a higher low there. So that's something to look for, and that could play out for a bounce trade back up and maybe give us another shorting up. But I don't think this correction's finished until we at least come down to that trend line I just showed you there on the longer term charts. And as I said, the floodgates, once they break, there's been a lot of pent up excesses in this market. The potential's there. We can slice through there, hit it today, be a big move down, or most likely what will probably happen is this market will have another lackluster bounce sometime today, maybe, possibly like yesterday, a little dead cat bounce like this one, and then gap down on Monday, hit those targets, and sometimes even hit them pre-market in the futures. Very often, that's another reason I like to trade futures. On many more than one occasion, my downside targets were hit before the market opened during after hours. And you can, if you trade QQQ in pre-market, you can also get out early. But sometimes you hit those downside targets at 8 o'clock a.m., 7:30, even 9 o'clock, and then the futures start reversing. And by the time you open, the train has left the station. The target was already hit and fulfilled. Here's SPY on the 60-minute chart. Coming up to support here. I have some support there. We can call actually support zone, if you will, maybe all the way down to about right here. But we're coming up on some support, and also you can see potential divergence there if you zoom in on the indicators with SPY. So once you get that divergence, especially if it's confirmed, you can get a pretty decent bounce when you have 60-minute divergences. This is my go-to swing trading time frame, and I love to see 60-minute divergent highs and lows to position for. So, at this point, even though I think we'll get down eventually or sooner than later, probably to that long-term trend line on NQ. Um, it's like yesterday, is a risk to reward shorting here. I did make mention earlier today that I thought, the bounce that we had in pre-market, that was the opportune short. That's when I re-entered NQ at 8:30 a.m. Eastern time. They came out with the employment numbers. Futures had a sharp spike up, and that was it. And and so far, well, obviously, that proved to be the most objective shorting up since back here, since we broke down. All right, let's look at one more chart. SPY, this is a daily chart. Here's a long-term trend line that was already broken and back tested for a while. And this is a trend line you can see here coming off, almost hits that bottom on early April lows. So we're right on trend line support here on SPY. And like I always say, I like to look at both the futures and the ETFs. ETFs, they're both, make sense. And if you see, you want to see them all breaking support for the next sell signal. But if you have, let's say in this case, SPY holding support and ES is a little bit below support, maybe SPY catches a support, maybe more SPY traders. There's a lot of institution professional traders that use SPY. But so sometimes you can have the buy orders come in there and we could ramp up. But like I said, whether we bounce here or not, I think the bounce will be limited and fleeting, and I favor a move down here still to at least that 279.80 level on SPY. Let's look at the 60-minute chart, see if there's anything there new to report. There's a similar trend line. That one goes back. You got to go back, step back here. Early April lows again. That's that trend line I just showed you there on the daily. So I see a little more downside in SPY before all said and done. And QQQ. QQQ's taken out that 180-ish support level. You can see that. It took, of course, yeah, that downtrend line right there. We had a little pop yesterday, a little flagging type action. I mentioned that I think in today's video. It wasn't, at least on the NQ, it didn't look like a textbook bull flag, a bear flag, but here it does. There's your flagpole, the swift move down. And you can draw it this way. I'm trying to use a line tool here, not arrow tools for that. But there's your bear flag, and there's the nature of a bear flag pattern. You have an impulsive move down leading up to followed by an area of consolidation, and then another impulsive move down once the flag breaks. And measurement-wise, this flag would project even further because the measured target for a bear flag is the distance of the flagpole leading down to the formation of the flag added to the highest point of the flag. So that'd bring us down somewhere like that. If it hits its measured target. And you can see there's actually some reactions down around there in QQQ. So all right, one more QQQ daily, and there's another long-term trend line coming in right here. That trend line would come in off the 2015 lows from that correction we had back then. A little flash crash in the Qs. If you're looking at the the NDX, the index that QQQ tracks, you will not see that reaction. The Qs are an ETF, and they were subject, like a lot of stocks on that day, had flash crashes, little mini crashes. So you have a longer candle. NQ candle would end about here, so somewhere, but it will pick up perfectly along this point here in early 2016. You have these same reactions. So it's a very valid trend line. It hasn't been tested since looks like about the April lows. And that would mesh with that target that I just showed you at the beginning of the video in NQ. So counter trend bounces aside, and I really, at this point, when you get at this point in a correction, I wouldn't bank on it. I wouldn't try to game it. That's just me. I've learned to, ride it out, because this is we've already hit, or should be hitting now, that what I call the WTF moment, where the dip buyers realize all of a sudden the strategy that's worked for so long isn't working. Stops start to get hit. Latecomer shorts start piling in. You get that impulsive selling. So that's what I'm looking for. And then that might be a nice place to go long for a bounce. But remember, that's dangerous too. Although I think we'll get a reaction off that level because we haven't hit it in a long time. Do not forget that this comes after a very big divergent high. We have the negative divergence on the weekly. You have to, look at my previous analysis if you didn't. This tells me that sooner or later, this trend line, this primary uptrend line off the 2015 lows, the same one on the daily, is likely to go sooner or later. If we can get a bounce, a reaction, it may go later in the year, could go in the first quarter next year, but it could also go right, very soon. We could hit it, have a little reaction, or just even slice through it. Anything's possible. So that's that. And all you can do is have your ducks in a row, have a trading plan, and be flexible. Yeah, plan A, plan B, and plan C. But this is when I actively engage the market. I view trading. I always use the analogy. I'm like as a trader, swing trader. I love watching those Animal Planet shows, Discovery Channel, and you watch the predators. They will sit and wait. They don't chase. A cheetah doesn't chase after every gazelle that walks by it. It would die. It would run out of energy, wouldn't catch enough, and it would die. So, same with the crocodiles. They'll sit in the river waiting days, weeks, sometimes months before a meal. And that's what you have to do is when you finally see it, this is when the money is to be made. If you've been looking to short the market, once you get these breakdowns, you can't ignore that. And this is a weekly candle. We are going to print that bearish engulfing that I talked about yesterday, barring a crazy stick save into the close. That's a pretty powerful sell signal. It is a break of this smaller uptrend line, this wedge. It's a bearish engulfing candle that has longer term bearish implications. So I consider this, that annual migration of the wildebeest you watch on those shows when they come to the river and the crocodiles are there. They haven't eaten in months, but all of a sudden, that's when they're going to get enough food to last the next, 3-4 months. And you have to jump in and take advantage of it. And then the next opportunity could be on the long side here for a swing trade. If we, look for a bounce off this level, that'd be a healthy correction if we get down here. That's another, I think I already outlined it. Yeah, about 3.5%. And again, we'll just have to see how the charts look when we get there, and that will tell us whether we want to position long for a, bounce that might last a few weeks, couple months, couple days, or if we want to hold on short and maybe wait for a break of that trend line in that 40-week EMA that's just below. All right, let's end it here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.